What's going on, guys? It's Henry. I'm back with another video, and in today's video what I want to do is actually a live trading session. Now typically I cannot post this on YouTube because I'm typically only posting this on my Discord community, but today I wanted to share with you how my Friday sessions look like. So typically I'm trading live on Monday and Wednesday, and then on Friday I'm closing and adjusting positions. This Friday, it's a boring Friday, and that's a good thing because all of my positions have won. You can see here that on Amazon, I made $128 on a small portfolio. Bank of America, we're up $60. Coin, we're up $500. Netflix, we're up $550. Neo, we're up $80. Tesla, I'm doing call credit spreads. It's a really big misconception, by the way. A lot of new students that join me in my Discord community will say, Henry, I know you're a big bull on Tesla. And that's actually not true. I am not a big bull on Tesla. I am making a lot of money on Tesla with call credit spreads, basically saying that this stock is not going to go up, okay? So you can see here that I have a Tesla call credit spread, which I made $520 on, and I'm saying on this position that Tesla is unlikely to go up above $187.50 per share, and I was correct on this expiration day, so this was a winner. So I won 1, 2, 3, 4, 5, 6 out of 6 trades. Now I have closed some other trades during the week. I actually closed Alibaba for a really good profit. I can actually show you what happened on Alibaba. And this was basically like a 150 IQ play. I'm really happy that I did this yesterday. So in my community, I basically had a few call options on Alibaba at the 83 strike. Let me actually show you instead of like just telling you. I like to show things. I like to show proof and receipts because a lot of people can say whatever they want, but they're not going to show you. So if I go to my history, you can see right here that I ended up buying an Alibaba 83 call option. Now, I am very rarely buying call options. I just don't really like buying options in general. I like to stick to safe, consistent, passive income strategies like selling puts and covered calls. But I saw an opportunity in Alibaba and I decided to buy 10 contracts of the $83 call option. That's the strike that I chose. Now, this option is expiring today, but I ended up alerting my community yesterday and closing this out. And that was literally the best decision I ever made because check it out. Well, I bought BABA 83 call. I spent $3,350. That's quite a bit of money, okay? For a buying strategy, that is quite a bit. I don't typically drop a few $1,000s on buying strategies, okay? I ended up dropping $3,350, and then Alibaba had a really good move yesterday. So I didn't want to get greedy with it. I always tell my students, don't get greedy. If you can make profit, take that profit. And it depends on how much, of course. I like to take profit between the 50% mark, sometimes higher than that. It really just depends on the position. If I'm selling options, then I like to collect 100% profit, and I will take that position up until the expiration date, usually, unless it goes in between my strike prices for a spread, and then I'll end up closing it. But basically, I had a call option, $3,350, and I ended up selling it for $3,750. So I ended up making $400, and that was yesterday, okay? Now, if you notice what happened today, Alibaba is down. So I'm very happy that I did not get greedy because oftentimes the market will go up, it'll go down. It doesn't really have a clear direction. I cannot predict the future, okay? Nobody can. If they tell you that they can predict the future, they're selling you a course, they're scamming. It just doesn't make any sense. Nobody can predict it, not even Warren Buffett. So for me, I'm using technical analysis, fundamental analysis. I'm trying to make the best decisions. I can't predict what's going to happen, but when I see a stock like Alibaba up a lot, so if I go to the 1 week chart, you can see here that when it jumped up yesterday to about $88 per share, I ended up selling and making a small profit. Now, granted, when I buy options, I really want to see a much bigger gain, so I'm hoping to turn $3,000 into like $6,000. In this case, I turned $3,000 into like $3,300, right? So I'm only made, I think it was $400, which is not a whole lot of money, but hey, at least I was smart with this position. I ended up taking profit and I ended up winning. And that was one of the riskiest plays that I've had in my portfolio for a very long time. To be honest, if you look at the rest of my portfolio, it is very, very safe. So what I'm doing today, and this is also why I don't have to post in my Discord today, is because all these positions have won. So I'm not going to do anything. I'm not going to close any of these positions. I'm just going to let them expire worthless, and I'm going to collect my full income on these trades. I've already collected income as soon as I made the trade to begin with, but now it's actually out of my account. And on Monday, when I have my live trading session, I can basically just open all of these positions again. I'm going to use the same stocks, most likely. I'm going to pick similar strike prices. I mean, the technicals have not really changed that much from 1 to 2 weeks. So I'm just going to do a lot of these positions again, and I'm going to keep doing that week in and week out. And that's what I've been doing for a long time. So now I want to show you some other positions in my portfolio, and I might even open up some trades. I mean, I didn't really prepare for this video. I'm just telling you from the bottom of my heart, this is exactly how I trade and what I do. I'm not really prepared. I don't have a script or anything like that. So let's just take a look at the rest of my portfolio. I have NEO, Tesla, and then I have American Airlines, and this now expires on the following week, right? So this expires on 5/19. And if you're watching this in the future, it doesn't really matter, right? Because the way I'm trading and my logic and my psychology behind how I trade is more important than my exact trade right now. So I'm making profits on American Airlines. That is a covered call and American Airlines sell put right here. These are two really good positions. Actually, if I open up like Yahoo Finance or something, I show you a chart of American Airlines, you will notice that American Airlines has a very, very steady chart. And that's exactly why I like selling both puts and covered calls on American Airlines. It does go up and down, but it doesn't really seem to have any clear direction, and it never really leaves its range. So for example, for the past, month, exactly 1 month actually, 30 days, this stock has really gone nowhere. I mean, it's gone from 13 to 14, okay? And if I go all the way back, let's see, if I go back to like the beginning of the year, it's still around 13, 14. Yes, it had a big spike up to 17. Then it came back down to reality. I mean, this stock really doesn't move, and this is the exact stock that I like to use for, selling strategies. Because look, now this is a 1 year chart, and this stock is still not doing anything. It just goes up, down, up, down, up, down, up. And then this is a little bit more sustained, but then down, okay? And then it went up a lot and then down. And that's what makes American Airlines such a good company for selling both puts and covered calls. And as you can see here, I'm not making a lot of money, but I am consistently selling options on both sides on American Airlines. And this is not a lot of collateral, right? I mean, you can literally have, $1,200 or $1,500 and you can enter this type of position, and you don't need level 3 access to your brokerage account. So if you don't have level 3, or you just want to be safe, then American Airlines is a perfect stock. And as you can see, I actually have the 13.5 as well. Then I'm also making money on Apple. So I currently have some call credit spreads. We've already made a lot of money as a community on Apple. I opened this up quite a bit ago, and so far it's going really well. Same thing applies for Airbnb. Now this is a call credit spread, so each spread is about $500, but as you can see, I do have 25 credit spreads here, so that's about $12,500. So this is a 5-figure amount in Airbnb, which is, a lot of money for one single position on a spread. However, it's going really well. I have so far made over $1,000. Next, I also have some iron condors. So I like iron condors a lot because they play both sides of the equation, again, calls and puts. And I'm doing Adobe iron condors, and I have two different positions. One is down about 500, one is up about 500. So these two really negate themselves. Then I've covered calls on Alibaba, which I actually just opened up yesterday. So this position's up $710 in 1 day, which is amazing. It's awesome. And then Coinbase, Coin, Costco. Anyways, let's skip down. I'm not gonna have time to show all the positions like I do in my Discord community because I do much longer trading sessions. But I did want to point out other stocks that I have in my portfolio, okay? I won't have enough time to go through every single option position. That would probably take 30 to 45 minutes, and I know the attention span is not long enough on YouTube. So anyways, if you wanted to check out my Discord, you can always check it out in the first link in the description. But check it out. If you look at the stock market today, it's down a lot. I mean, it's not down a lot, but it's down about 30 basis points, which is like, 0.3%. QQQ is down 0.5. American Airlines is down. Notice how everything is down quite a bit, but my portfolio is pretty flat. That's actually a good thing. That's because my portfolio is utilizing the spreads as well as utilizing selling options to hedge, okay? What a hedge is basically when the market moves down, I lose less money because I'm hedged. My positions are actually benefiting from some downward action, okay? So some people's portfolios are set up where if the market goes down 1%, they lose 10%, okay? I know you may have experienced that, or other people that experienced that, right? The market's down 1%, and then you look at your portfolio and you're like, wait, I'm down 4%, I'm down 5%. Well, guess what? That's because you're not actually trading properly. You don't have good risk management in place. You're invested in the riskiest stocks. And when the market pulls back a little bit, you pull back a lot of it. And that's not really a good thing. I never actually have that situation. And that's why I'm able to also trade on margin. And yes, I have a margin trading video coming out pretty soon. I hope in the next couple of days. I've gotten your comments on that, so I will be making a margin video as soon as possible. But look, if your portfolio has a lot of volatility, that is not a good thing, okay? My portfolio experiences very little volatility. I mean, literally, look, it's down basically like nothing. I mean, I am down $1,000, but I am down about 0.06%, which is actually called 6 basis points, okay? The market is down 30, so it's literally down 5 times more than me. I know this doesn't seem like a big deal, but hey, this is a really big deal when every single day you're beating the market by 10, 20, 30 basis points, because in a given week, that means you're going to be beating the market by about 1%. Okay, if you can beat the market by 1%, that's 4% a month, okay? And that's 48% a year. On average, the market returns roughly 10 to 12%. And if you can beat it by 40%, right? That's going to be a 50% return. Now, I don't know about you, but Warren Buffett has like a 20% return. So if I'm hitting 50% return and I can do that safely and consistently, that is literally game over. That puts me into like the 0.001% of investors. So again, when people say, oh, this is not fast enough, I kind of just laugh at them, because if this is not fast enough, then you're just broke, okay? And that's fine. It's okay to be broke. We all have to start somewhere. I started with $2,000 back when I was 19 years old. And I got my first internship on Wall Street. I started to learn option trading, right? But if you think about it, 50% return per year is astronomically high. That's better than every single other investor. That's better than the legendary investors. That's better than any of the fake gurus out there as well. Of course, lots of gurus will tell you they're making a lot of money and they'll only show you their wins, but they won't show you their losses. And I do have some losses myself. I mean, I don't have a whole lot at the moment, but here's a $10 loss, $31 loss. In Snow, I'm currently at a $1,100 loss. SPY though, I'm making 5,000. Anyways, I won't go into all the details right now because we don't have enough time, but I think it's really important to talk about wins and losses, and you really need to learn from your losses. And you can also learn from your wins, but losses, the ones that really sting, that's actually where you learn more than the gains. You know, when you have a gain, you kind of expect it. You become a little bit entitled, you get a little bit of an ego. I have that myself as well. I'll make a lot of money, and I'll get really confident, and then I'll have one little loser, and it won't be that little, it'll be a few $1,000s, and it'll kind of sting, and I'll be like, wow, okay, kind of hurt there. So I'll kind of start to understand that, hey, I also have to always keep risk management in mind. Even if the market continues to go up, you still need to be cognizant and understanding that the market can pull back at any time, okay? So a lot of people also ask me, like, what are my favorite stocks? Well, let's look at my watch list. I do like a lot of these stocks. I've been avoiding Disney. That's really a good thing, because I saw that Disney fell a whole lot after some event. I don't follow it super closely, but now that it's at $91, I think Disney is an interesting buy. Amazon, Nvidia. I actually have an Nvidia video that I'll put in the description. Nvidia is one of my favorite stocks, actually. I don't currently have shares, but I'm planning on putting some money into Nvidia on a long-term basis. And then, you know, some other stocks like Unity. I follow this company because it has a lot to do with like AI, has a lot to do with the metaverse, but I have not really invested in it. It is just in my watch list at the moment, okay? Some of these stocks that I have in my watch list doesn't necessarily mean that I'm like in love with them. It just means that I either think that they're gonna fall a lot or go up a lot. So they're on my watch list so I can utilize options on them. And of course, Alibaba. I really like having some Chinese exposure, whether that's NEO, Alibaba, or JD. I have all three of them in my portfolio right now, and I want to diversify in overseas companies, and I want to be in foreign investments as well, because you know, what's happening with the dollar kind of looks dangerous to me. What's happening with inflation domestically doesn't look too great. So I do want to be diversified into other potential currencies, and some Chinese exposure for me makes a whole lot of sense. Now, the other companies I have on my watch list include Oatly. This is a company that's been actually having some negative momentum on the downside, but I have a bunch of $2 puts. So if I actually click into Oatly, I'm not doing that bad. So I have it at $2.87. Yes, I'm down a few $1,000s, but in total, I'm actually up a couple thousand as well on options, because I've sold a whole lot of $2 puts. You know, again, $2 puts. I have $3 covered calls. I have $1.50 puts, which are doing pretty well. And then I have a $1 put, which I actually sold as a leap put option. It's really interesting. I sold a leap put option. Let me know if you want a whole video on leap put options. I can make a video on that if you shoot me a comment down below. And of course, I always love when you guys like this video. That really helps out a lot. And when you subscribe, just makes me super happy. So of course, I thank you for that. But Oatly $1 put, I ended up selling this, which is a long-term put option. It's kind of like a leap, but it's like a sell put leap. Okay, I ended up doing really well. This is $1, which means that it's only $100 worth of collateral. Let me actually go into this position and tell you how much money I've made. This is really, really good. So I ended up making $326. I sold 14 contracts. So 14 contracts times 100 is $1,400, and I'm up about $300. So you know, 1,400, 300. That is about 1/4. So let's just round it down and say I made 20%. Well, that is really awesome, because I ended up making 20% on a put option that I literally do nothing with. I just sold it, which is really far into the future, but 20% per year, that's actually not that bad of a return either. All right, so to wrap it up, I've won 6 out of 6 trades that I have open at the moment. This is a typical week for me. I'm actually trying to make 10 to 15 trades in my Discord community. So on Mondays, I'll try to open up like 5 or 10, and then on Wednesday, I'll open up between anywhere from 3 to 5 as well. And then on Fridays, I'll typically have some rolling. I'll adjust some positions that are losing, or honestly, most Fridays are pretty boring and that's a good thing. So whenever I have an update for my members on Friday, it's typically like, hey, we won most of our trades. Here's one trade that we might have to roll or close. So anyways, if you want to follow everything that I'm buying and selling, I'd be more than happy to have you in my community. Make sure that you go to the first link in the description. You're actually able to watch a free training, and then you're able to book a free call with myself or a partner on my team so we can actually learn more about you, figure out the best package, the pricing, customizing it, how much coaching you want with me personally. And then we kind of go from there, and you can actually see all my trades, follow everything, and I can also support you all trading hours. And I'm curious, would you rather make 1% a week super consistently and safely, and that never goes away, or would you rather have a chance to make 4 to 5% a week, but there is some chance that you have to manage, roll those positions, put in more work, and potentially have some losses?